subject. It has various subjects under it or components. We are here to deliberate on some components of business studies. There are various components. The various components here are components, business studies. We have accounting as a component. We have economics as a component. We have entrepreneurship as a component. We have 4, commerce. We have office practice. These are major components of business studies. In our context, I would like us to discuss only 2 components, that is accounting and economics. As far as national examination is concerned, and those who are undertaking accounting as a subject in institutions of higher learning, I would like us to start with accounting as a major component of business studies. And in most companies, they require the knowledge of accounting for them to have a systematic record. Education is very important, and as Julius Nyerere said, that education is not just a way of escaping poverty, but it is a way of fighting poverty. So everyone who is watching this, just be attentive as I am going to take you through various concepts in accounting and economics. There are various prerequisites to accounting, for example, and I will show you some of the prerequisites before you get into an accounting national examination or any other practice provided. Number 1 is your pen. Number 2 is your ruler. Number 3 is this, a calculator. You have to be with this. I said that accounting is as easy as chewing Cadbury. Most of us, I believe, we've chewed Cadbury. Maybe I just show you this Cadbury. This Cadbury, I compare it to preparation of financial accounting, for example, is as easy as chewing this. Maybe to show you this. This is our Cadbury. Sorry. This is our Cadbury. We are still remaining with some here. Maybe we have a test. Counting is just as easy. Maybe you can take one. As easy as chewing Cadbury. So, I will want us to discuss financial statements as a major concept in accounting. We have various concepts. Let me divide my whiteboard. We have financial statements. Being examined. Let's look at financial statements. Financial statement is a major concept in accounting. And in financial statements, I would like us to look at various examples of financial statements as far as national examinations is concerned. That one is KCSE, and in higher institutions, or the institutions of higher learning rather. Number one, we have trading account. Number two, we have profit and loss account. Number three, we have trading, a combination of the two, trading profit and loss account. And number four, we have the balance sheet, also called statement of financial position. We have five is the cash flow statement, cash flow statement. As far as high school is concerned, we are going to dwell on trading account, profit and loss account, also always called income statement, trading profit and loss account, and the balance sheet. This one, in our context, we will have to leave it. We'll look at it or we will prepare it in institutions of higher learning, the universities and colleges. So, the first financial statement is trading account. Before we prepare any financial statement, we must understand its format. We have to understand its format. We'll prepare trading account, trading profit and loss, to combine the two for this time. I'm going to show you its format, how we are going to prepare a trading profit and loss account, because it is very important and it must come in your exams. So this is our format, let's say trading profit and loss account combined together. Let's see its format. Its format is here. It takes a T-shape format. We have name of the company. Let's say James and James Traders. Name of the statement we are preparing, we have trading profit and loss account. The time of preparation we have for the period ending, say 31st December 2020 as an example. It has credit side CR denoted by CR, then we have the debit side, then we have two money columns. This other side we have one money column. You have to understand the format before you prepare any financial statement. We are preparing trading profit and loss account. So this is the flow. This is the flow of the accounts. We have opening stock, we add purchases, we add carriage inwards, we less return outwards, and we have to bracket this because we want to acquire the net purchases. The value here we transfer it to the second money column. Then whatever we acquire here is the cost of goods available for sale. Cost of goods available for sale. Then we less closing stock, there. Whatever we acquire here, we must bracket it in accounting to show that we are subtracting from cost of goods available for sale to acquire cost of sales. These are our cost of sales. Then we move to the other side. We have sales, we have less return inwards, also called sales returns, return inwards. These are goods that were sold, but they have been returned back to the business. We subtract, then whatever we acquire here is what we call as net sales. Net sales. So we want to acquire the gross profit for trading account. The first part, we have prepared whatever we call trading account. So when we realize that our net sales is greater than cost of sales, net sales, watch this, net sales greater than cost of sales. This implies that we'll acquire gross profit. Net sales greater than cost of sales, we acquire gross profit. When you realize that net sales is less than cost of sales, this implies that we've realized gross loss. You have to understand that. So up to this point, we are going to make a comparison between cost of sales and net sales. If we realize that this one is greater than this, then it will be gross profit carried down rather. Gross profit carried down. That is our balancing figure. That will be our balancing figure. Then we balance it. We balance it at that point. Up to that, we have prepared what we call trading account. We'll proceed We are proceeding. And we are going to have an example of this. We are moving on, preparing profit and loss account, then finally trading a full statement, trading profit and loss account. After reaching here, we move the other side. Let's say there is a continuation. There is a continuation. There is a continuation of our statement. We have money column. We carry it down here. We must bring it down the other side. So here it will be gross profit brought down as our expense, as our income. This is our income, gross profit carried down. So we'll compare expenses against incomes or revenue. Let me just indicate that. We have revenue stroke income. Then here we have expenses. Examples of expenses, we are going to list them down. We have rent expense. We are going to list it. We have commission allowed, discount allowed rather. Discount allowed. We add it to another example of an expense. We have examples of expenses. We have electricity expense, salaries and wages, let's say those are the expenses that we are having. Is that now? Then income, we have rent income. We have commission received. Commission received. When we realize, the moment we realize that our revenue is greater than our expenses, we shall have a balancing figure this side on the DR side. We realize, we compare revenue to expenses. When we realize that revenue greater than expenses, this implies that we have a net profit, and vice versa. We realize that revenue is greater than expenses, total revenue greater than total expenses, then we shall realize a net profit. So this part is what we call profit and loss account or income statement. We are going, let's say in our case, revenue is greater than expenses, total revenue greater than total expenses. The balancing figure will be on the DR side and it will be net profit carried down. Then we balance it off. That one, balance it to that point. Then we carry down on the DR side, we must bring it down on the CR side. We have net profit brought down. This full format of trading profit and loss account. Very important before we prepare this financial statement called trading profit and loss account, we have to understand its format. After seeing that trading profit and loss account, we are going to see an example We are going to prepare a full statement as per the information that we are going to have in a few moments. Let's wrap this. Allow me to wrap this so that we have our question right over here. Yes, we have a question. After we've prepared it, I'll allow some questions. Anything not understood clearly, we'll have to look at it. Let me wrap this. Allow me to wrap this. You have a question here, and I am going to write it down. You have a question. I am going to write it down. This is our question. This is our question. The following trial balance was extracted from the books of BD Traders PLC on 31st December 2019. BD Traders trial balance as at 31st December 2019. Capital is 800,000. Stock as at 1st January 2019, 200,000. Purchases 680,000. We have returns 50,000 on the DR side, 80,000 on the CR side. Discounts, we have 80,000 DR, 45,000 CR. Carriage inwards 2,000. Debtors, creditors 200,000 respectively. No 5. Sales 1,200,000. Motor vehicles 750,000. Furniture and fittings 250,000. Rent, we have rent income is 50,000 and rent expense is 50,000 and rent income is 60,000. Bank overdraft is 42,000. Then lastly, carriage outwards is 30,000. Then additional information is that closing stock was valued at 80,000 Kenya shillings. Required is that we prepare trading profit and loss account as at 31st December 2019. Then part B is that we determine rate of stock turnover as easy as chewing Cadbury. Now let's prepare this one. This is trading profit and loss account. I said that trading profit and loss account, it has a T format. It has a T format. A T format. It takes a T format. Trading profit and loss account takes a T format. T format. It takes a T format and it has CR and DR side. Name of the company, BD Traders. Name of the company is BD Traders. BD Traders. Name of the statement we are preparing, trading profit and loss account. The date of preparation is usually end of a financial year for the period for the period ending, the date at which we are supposed to prepare it is 31st December 2019. That's our format. We have money columns, the first money column, second money column, Kenya shillings. We have CR side, one money column. I would like us to note down the accounts that are going to be captured on our trading profit and loss account. Not all these accounts are going to be captured in our trading profit and loss account. I want us to note the accounts that we will capture on this statement. Capital. This one is a balance sheet account. This one is balance sheet denoted by B.S. Stock is trading profit and loss account denoted by TPL. Purchases, trading profit and loss account. Returns, we have return inwards and return outwards. Return inwards is this. Return outward is always on the CR side. Return inwards are called sales returns, while return outwards are purchases returns. So you need to understand that clearly. So returns, we are going to use it at trading profit and loss account on that statement. Discounts, we are going to capture. Carriage inwards, trading profit and loss. Debtors and creditors, balance sheet. It will be very easy after marking the accounts that we are going to capture on the other side. Sales, trading profit and loss account. Motor vehicle, balance sheet as a fixed asset. Furniture and fittings, balance sheet as a fixed asset. We have rent, trading profit and loss account. We have rent expense. All expenses are always on the DR side, while incomes are on the credit side. So you need to understand which one are we going to use in their respective areas. This one is rent expense, always on the DR side. We have rent income on the CR side. Bank overdraft is a current liability on the balance sheet. Then carriage outwards, we are going to use it on trading profit and loss account. With the knowledge of the accounts that we are going to capture on this statement, now we can move on preparing our trading profit and loss account on this other side using the format that I already shown you. So, without any further ado, let's prepare it slowly by slowly for us to understand it perfectly. We started by opening stock. We said that opening stock. Then we have two stocks. On the additional information, we have closing stock valued at 80,000. Then we have this stock here dated 1st January 2019. This one is our opening stock, which is 200,000. We transfer it to that column. Then we said that we add purchases. Add purchases. We've used stock, just take it after using it, or opening stock. We have purchases. We add purchases 680,000. Add purchases Our purchases 680,000. 680,000 Kenya shillings. Then we add carriage inwards. Add carriage inwards. Rather, I did a mistake. This one, we are supposed to record it on this first money column. We are determining net purchases, then we shall add it to opening stock. 680,000, add carriage inwards. Carriage inwards is 42,000. Our carriage inwards is 42,000. 42,000. Then we less return outwards. We less return outwards. Return outwards is also called purchases returns. Our return outwards, we have return outwards. This one is our return inwards. This one is our return outwards. So we capture it. Return outwards is 80,000. We are lessing it. So ensure that you bracket it. The whole of this one, we transfer it to the second money column. Let's get the totals. We have 680,000 plus 42,000, then minus 80,000. We get 642,000. Whatever we shall acquire here, when we add net purchases plus opening stock, whatever we are going to have is what we call cost of goods available for sale. We add opening stock plus the net purchases. This is our net purchase. We get 642,000. When we add this to this, we have what we call cost of goods available for sales. 200,000 plus 642,000. We get 842,000. This one is our cost of goods available for sale. After we've done this, or after we've acquired our cost of goods available for sale, we move on to less closing stock. And our closing stock is on the additional information. We have 80,000. Just bracket it. So whatever we are going to acquire here is called cost of sales, or COS. 842,000 minus 80,000. 762,000. This is our cost of sales, or cost of goods sold. Then we move to the CR side. We have sales. We record sales. Our sales is here. It's 1,200,000. Then we less return inwards. Sales returns, we less on sales. Purchase returns or return outwards, we have captured it here, return outwards. This one is now return inwards, or sales returns. Our sales returns, we have under returns column, we have return in, then return out. As return inwards is 50,000. So we have captured that, 50,000. Whatever we shall acquire here, we call it net sales. 1,200,000 minus 50,000. We have 1,150,000. This is our net sales. Earlier, I said that we compare net sales to cost of sales to acquire gross profit. When we realize that net sales is greater than cost of sales, then that is automatically a gross profit. So we are going to carry down our gross profit. We shall get the difference between 1,150,000 and 762,000. Then we carry it down so that we can balance it off. So let's get the difference. 1,150,000 minus 762,000. We acquire 388,000, and this one is our gross profit carried down as a balancing figure, which is 388,000. Gross profit carried down is our balancing figure here. So we are going to find a straight line. We have a straight line. I would like us to balance it off. Let's balance it off. Let's balance it off. Let's balance it off. So it will balance now at 1,150,000. 1,150,000. When we add this to this, it gives us 1,150,000. We carry down this gross profit. We will bring it down on the CR side as our first income or revenue. Gross profit is our first income stroke revenue. So we are only going to compare expenses against revenue stroke income. I said that we bring it down here as our first income. Gross profit brought down is 388,000. Let's check whether we have other expenses and other revenue stroke incomes. Discount allowed is on the DR side, is our first expense. We have discount allowed, 80,000. Discount allowed, 80,000. We have two discounts, discount allowed and discount received. Discount received is an income, 45,000. Discount received, 45,000. We are done with all the discounts. Debtors and creditors, we say that we have another expense, or we have rent. We have rent expense and rent income. Rent expense is 50,000. Of rent, 50,000 as an expense. Then we have rent income, 60,000. Another account that we have not captured, carriage outwards is an expense, 30,000. Carriage outwards is an expense, and our carriage outward is 30,000. So, we are going to compare our revenue against our expenses. And when we realize that our revenue is greater than our total expense, total revenue greater than total expense, we shall acquire what we call net profit. We are comparing revenue against expenses. Whatever we shall acquire here is our net profit, and we are going to carry it down. Let's compare 388,000 plus 45,000 plus 60,000. We have 493,000. Let's write it somewhere. 493,000. Our revenue, then our expenses, total expenses, 80,000 plus 50,000 plus 30,000. We have 160,000. The difference between these and these will be our balancing figure. This other side. We have realized that our revenue is greater than our expenses. Our revenue is going to acquire net profit carried down. The difference is 493,000. We subtract 160,000. We acquire 333,000. For it to balance, we are going to acquire 333,000 for it to balance. So we are going to balance it. We're going to balance it at 493,000. We're going to balance it off at 493,000. 493,000. This other side, 493,000. Here we carry down our net profit. We must bring it down on the CR side. So net profit brought down is 333,000, and we are done with our preparation. I will wish that we just check it very clearly. We have acquired our net profit as 333,000. Very, very important. All of this is what we refer to as trading profit and loss account. Every business needs to know the profit that they have realized. The profit that they have realized after a given trading period. Every business in the whole world wish to know the profit that they have made in the long run. We have prepared it, and it's as easy as chewing whatever I had shown you earlier. So I believe it's very easy to master this. We have prepared it and we have determined our net profit brought down. The second question here is that we determine rate of stock turnover. Determine rate of stock turnover. That's our question. Rate of stock turnover is part B. Allow me to wrap this. Allow me to wrap this as we determine our rate of stock turnover. Our second question is that we determine our rate of stock turnover. Rate of stock turnover, abbreviated as ROST, is equals to cost of sales over average stock. Cost of sales over average stock. Our cost of sales, we have it here on our trading account. Cost of sales is somewhere here, 62,000 Kenya shillings. Our average stock, let's calculate average stock. Average stock will be, we sum the two stocks, opening stock plus closing stock. Opening stock 200,000 plus our closing stock 80,000. We get to 80,000 as our average stock, as our the total of the stock. So 280,000 divided by 2, because average is we divide by its numbers. Divided by 2, we acquire 140,000 is our average stock. So let's calculate our ROST now. Cost of sales, we have it as 762,000 divided by 140,000. Let's calculate it using our calculator. Let's determine it. 762,000 divided by 140,000. We have 5.444 into our whole number. We say it's 5. Then we say times. What do we mean by this? 5 times. It means that this company, BD Traders, made a restock 5 times within its trading period. You indicate times to indicate that BD Traders restocked 5 times. It's time that I am going to allow questions. I am going to allow questions. Any questions? The line is on. Any question? You can comment, you send a message, write a comment. Any question that you will want us to tackle? Any question time? I will allow anybody who has any question related to rate of stock turnover and everything that we prepared, our statement, trading, profit, and loss account. Any question, wherever you are, I would like that you ask any question. Any question. Okay, there is a call. Someone here is calling from Mombasa. Yes. Hello? Yes.
My name is Justus.
Yes.
How about if we are asked to determine markup?
Yes.
And margin? I request that you assist me on how to go about it. Thank you.
Thank you very much, Justice. He is asking on how we can determine margin and markup, which is a very good question. It is not a must that you will be asked to determine markup or margin. In this case, we were asked to determine rate of stock turnover. Very important question. Let's determine markup and margin. as per our trading profit and loss account, will determine our markup and margin. The details we are going to acquire from trading profit and loss account. So markup, we have markup and margin. Let's start with markup. Markup, this is the formula for determining or calculating markup. It is gross profit over cost of sales multiplied by 100. Gross profit over cost of sales times 100%. Our gross profit is here. It's easy as chewing Cadbury. Our gross profit is here, 388,000. This is just a question from Mombasa. 388,000. We divide by cost of sales, 762,000. We multiply by 100%. Our markup here, let's use our calculator. 388 times 100 divided by 762. Is our markup. Our markup here is 50.92 into 4 significant figures percent, because we multiply by 100, so it is as a percentage, can leave it as a fraction. So this is our markup. Again, he requested us to determine or calculate margin, and the formula for calculating margin is gross profit divided by net sales times 100%. Our gross profit is 388,000 divided by net sales 1,150,000 times 100%. Let's use our calculator to calculate this. 388,000 divided by 1,150,000 times 100%. Our markup here, our margin is 33.74% into 4 significant figures. So we are done with that question. I believe we are done. These are the frequent questions that will be asked after you've prepared your trading profit and loss account. Markup, gross profit over cost of sales times 100. Margin, gross profit over net sales, multiply by 100%, and it is 33.74%. Believe in our next discussion, we are going to deliberate on a different financial statement we refer to as balance sheet or statement of financial position. Statement of financial position or the balance sheet. Let's meet next time as we deliberate on the balance sheet. Thank you, and may God bless you to understand everything that we have learned Today,